Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on the Forex market. You can see the bounce up that we discussed in-vehicle report stands on the way. In general, as you understand, it's actually based on anticipation on more hawkish steps from the European Central Bank. There's expectation of maybe 0.5% shift in interest rate, although overall suggestion consensus stands just for 25 basis points. Today we also get the inflation data on European Union, so it also might bring some clarity, but will hardly come as a surprise for market society. And as you understand, as technical as fundamental, we are coming to a very tricky moment, just because on the daily chart you could see that we are coming to the very unstable point, where it's clashing the bulls and bears actually. So this upper direction market is coming to resistance cluster, which is a 103 area, approximately 103.60, 127, which is also accompanied with the daily overbought. This will be, an area that's relatively difficult to pass through, just based on the background that we have this first moment. And this area simultaneously coincides with the moment of the rate announcement. And in the case if rate will be changed just for 25 basis points, that might become great opportunity for taking the short position, as here market could turn down. If it will be the 50 basis points, in this case market could try to move slightly higher, but as you understand, it will be still relatively difficult just to break the overbought area. So anyway, that's an area that might be the source of some bearish setups for trading. Because currently, as we already mentioned, this we have the bread and butter in place. So take a look. This recent thrust is relatively good. Market closed above the 3x3 for a second session today. And actually, the first fib resistance 102.05 area already has been tested. So theoretically, this conditions already sufficient for taking the trying to take the short position based on this bread and butter. But there are two moments that makes me think and makes me to that it would be better to just wait a bit more. First of all, if we'll take a look at the flow time chart, here we have a kind of the double repo by a lookalike pattern. So you can see it thrust down. Here's crossing of the 3x3, and the target of this pattern usually stands slightly higher, so around the 50% of the whole thrusting action. This is first moment. Second, on the hourly chart we haven't got any head and shoulders, and market has moved directly right to this area. So this is the classical target of some kind of the double bottom, where you're taking from the neckline to the bottom and count it to the upside the distance, or how you estimating the target. Alternatively, the way that gives you approximately the same destination is using this ABCD, despite that the C point stands below A, because we're calculating not the extension, we're calculating in fact the resistance, the possible target of the classical pattern. And you take this multiplier as a 2 to the AB leg counting from the C. So double AB leg is counting from the C, gives you the target. So you take the two measures of the AB, not 1618, not OP as we use the usually AB equals CD, but 2 times distance of the AB leg. And here, as you could see, it's precisely the level the market has reached. Here you could see bearish engulfing, but with this performance, and since we do not have any clear bearish pattern right there that could suggest the starting of the bread and butter trade, at this point, at this moment, I would wait a bit more and see what will happen, because market too inspiring with this anticipation of the European Central Bank decision. maybe situation will change through the session. So take a look, just monitoring, make the monitoring of this current situation. If you will see that some bearish pattern starts forming on a lower time frame, maybe market will form the butterfly here or something of that sort. Well, that led us to consider taking short position right at the first resistance where market stands right now. But with the background that I just have explained, it's really big chance exists that market will try to move slightly higher without breaking the background of the bread and butter, actually, because you can see market has in reserve this session, today's session, and tomorrow's session as well, because bread and butter should start within the not more than 3 sessions above the 3x3 by the Chudnapoli framework. So it means that on the next day, market still has time, and it still might be the bread and butter trade. And besides moving closer to the daily overbought, it's more comfortable to consider taking the short position, because it lets you to place the tighter stop, and it diminishes significantly chances on the occasional breakout, some spikes or something of that sort. So from that standpoint, maybe it makes sense to wait and see what will happen. That being said, in general, we have the bread and butter stop as progress. Right now, we suggest that probably a bit deeper retracement, higher retracement should happen, but take a look what will happen today's session. If any bearish pattern starts forming around this area, it also makes possible to consider taking a short position today.